Good morning. We'll let you join the call and be with you in a second. While you're joining, I will say a couple of words about today's, my guest today. Tal Kerret will join us shortly. As you can see, we're here with Charlie Federman and Larry Wagenberg. Before I get to that, I'll say good morning from Rye, New York. Tal, good morning. Welcome. So I was just saying, we just opened the call for people to get on the call. And I was just saying good morning from Rye, New York. Usually I would have said good morning from New York City, the World Trade Center, but now I'm saying good morning from Rye, New York.
Good morning, good morning. How are you?
Thank you. Thank you so much. And
you look so fresh and healthy this morning.
It's the shirt, because the shirt is yellow. They always told me it it takes my skin, and then it looks like I'm, more, happening. So,
good morning, everyone.
Oh, I see somebody from London says afternoon from London. Deepak, thank you.
Good afternoon. Good afternoon to all of those who are international. And
yes.
Good afternoon, of course, to those who are here with us close by.
Yes, I will say a couple of words. I'm very excited about this session today, and maybe I will say a couple of words about our guests today, which represent basically the tech investing arm of Silverstein family. From Tel Aviv, we hear good morning from Tel Aviv. Thank you. Good morning, David. So of course, Tal Kerret, many of you know Tal. We were fortunate to have him speak at several of our conferences, and we did an exciting session with Tal. Good morning, Connecticut. We had a call with Tal a couple of weeks ago that was very, very interesting. And we decided to do a follow-up session, but this time really focus on more, on the technology side of things and the story of the Silverstein story and the technology side of things. So a couple of words about Tal. I know Tal for ages. Tal is the president, of course, of Silverstein Properties, and he joined the family business in 2010. Silverstein Properties, privately held. Everybody knows one of the most important developers in the United States, full-service real estate development, investment, and management firm based in New York, founded in '57 by the great Larry Silverstein, of course. Developed, owned, and managed more than 40 million square feet of commercial, residential, retail, and hotel space. Usually I don't say that, but these are interesting things. I take for granted all of you know my guests, but I think it's very interesting. Recent projects include, of course, the World Trade Center, Four Seasons, Walt Disney Resort, and the Four Seasons downtown New York. In 2014, and this is why we're here today, he co-founded SilverTech Ventures with Larry and Charlie, a community of successful technology companies in New York City. I will not talk more about his past. We will talk about it soon, but obviously that Tal's past is in technology, and that's a very interesting point we'll be talking about, how really he married real estate and technology together. Charlie Federman is sitting here. Good morning. Beautiful view, beautiful view. I missed that view. Charlie, the great Charlie Federman, if I may add, is the founding partner of SilverTech Ventures. And it's an interesting story how that started, you and Tal and Larry, but I'll leave that for you. Charlie is a well-known investor and advisor to technology companies. He was a partner with the Israeli BRM. Those of you who know BRM, they are the ones that were very smartly invested in Checkpoint, that became one of the leading companies in the world, if not the leader in their space. They were most recently exited MoveIt. I spoke to Uri Levin, who was also involved with that, to Intel. Before SilverTech, he was doing, still does, personal investments. And one of, I think, is the interesting stories is Payoneer, that today is valued at over $1 billion. And before that, he was with Broadview, where he advised on more than 100 acquisitions of software companies. and was instrumental in establishing its affiliated venture relationships and growth in Europe and Silicon Valley. And Larry, of course, the third partner of the firm. The venture capital, by the way, started at the same day. I asked him, did Larry join later or Charlie joined before? They were all started at the same place. A partner and co-founder of SilverTech, has been an active member of the venture capital community for years. Initially with Ridley Partners, his focus has been software and internet sectors. Before practice law, where he focused on private and public securities transactions at Strook and Strook. Okay, I hope I pronounced it right. M&A and such. So welcome and good morning, everybody.
Good morning. Good morning, Danny.
Thank you.
Good
So
morning.
Tal, maybe you want to say a couple of words opening the discussion. I have a lot of questions for you guys.
Sure. So you asked the three of us to join you today. And when you asked, you said, tell us or tell me, and then tell my audience and friends, what is it like? How is it to work with technology? How is it to marry the family office world with the real estate and with the technology? And if I take a step back, I represent a family office. I've been the CIO of the family office for a while, then became the president of the company. And in our family, we look at things always as what is good for us, what is good for our family, what is good for our closest friends, which we call the extended family. And we try and do things in the way that we would always treat ourselves. And when I joined the family business, before that I was an entrepreneur, I was focusing on technology. Then I joined the family business, and one of the discussions, and I wouldn't call it conditions, but I've been asked to join the family business. I said, I'd like to consider how do we bring technology from the tech world. And Larry, who is an entrepreneur in heart, said, terrific, that's amazing. He loved it. And he said, bring it in, let's do it the best way we can. And it took a few years, because to bring real knowledge and technology in place, you need the right people. And serendipity is that one day I walk into 7 World Trade, which is where our headquarters are, and I bump into a gentleman who is walking out, which I knew at the time for about 2.5 decades, and that's Charlie Federman. You mentioned Charlie's background, but in a very modest way. But Charlie to me was always like someone I looked up to. He was known as kind of the father or godfather of a lot of the tech companies in Israel. He was, when he was at Broadview, the CEO of Broadview for a decade, he was the #1 in the United States in taking companies and doing M&As, large M&As. I did 24% of all the high-tech M&As at the time. So people were coming to him with, every company would go to Charlie. Some he would pick, some they would pick someone else, but doing 24%, that's more than anybody else. And he saw everything. And then he went and joined BRM, became the managing director, and they had one of the most known stories in Israel, where he was in the US and the 2 brothers were in Israel. And BRM invested $400,000 and got half of a company that was probably not doing great at the time, but then became Israel's superstar called Checkpoint. And Charlie, stop me if I'm saying something wrong, but Checkpoint is today a company $15 to $20 billion, depends on the stock market, doing very well. And his partners, Nir Barkat became the mayor of Jerusalem, a smart gentleman, and his brother, Eli. But Charlie invested also after that in some great companies at the early stage, and they became substantial. And my question was always, how do you pick these companies, Charlie? And he always tells me, I don't know. It's somehow they come to me, and I have certain gut feelings. I spend time with the entrepreneurs. It's like a specialized doctor that is, when they look at you, they say, you've got to run now to the emergency room, and they don't even know to tell you why. But when they take you there, they find that something was really wrong, because they've seen so many that they know intuitively and instinctively that this is it. And when you have someone like Charlie that sees the end game very well, and someone like Larry that has been on the side of the investors, the venture capitals, some of the founders, I've been there, used to call the venture capital world the dark side. They need the capital, but not necessarily the attitude that comes with it. Larry is unique in his capacity and attitude because he also loves entrepreneurs and he treats them very, very nicely. He brings that knowledge, and I have I would say the understanding, some people understand more than me, how the entrepreneur feels, because I've been there a few times, starting a few companies, tech companies. So I've seen and I felt the ups and the downs and the concerns and the sometimes feeling, even if you have co-founders, you may feel lonely in your thoughts or the need to vet things through. Being in all this gives us a different, unique perspective. So when Charlie said, why don't we try something here? Because it seems like we have this connectivity between us. This was fantastic. We said, great, let's start this. So my view on it is always coming from a company that is a family office that is for 63 years, focusing on our reputation, focusing on who are the closest people to our family, the friends and family that are with us. We have a couple dozens of family offices that are friends and family. They walk with us and they step with us in every challenge and everything we go through, and we love being with them and spending time with them. And they stepped with us in the real estate world, and they did well, I'm happy to say. And we spend a lot of time with them. We spend dinners with them and lunches with them and conversations with them on Zoom and on phone and on every way possible. And then when we started SilverTech Ventures, the vision was to extend that and bring it to the world together. We didn't know where it would go. Charlie and Larry, tell me if I'm wrong, but I didn't know where this will go. It was a step in a certain direction that we were hopeful and let it go the way it goes by itself. We only had one rule in our mind is let's keep our reputation and let's keep working only with people we love and appreciate. Charlie, I'm passing it to you and Larry.
Thank you very, very much, Tal. It's very hard to speak after such a warm introduction. I feel I'm only going to disappoint the panelists, the audience. But let me just share some perspective that I think is important. If I look at our industry today, it's composed of a myriad of niche specialty companies. There's sunrise and sunset areas, and they can turn on a dime to become sunrise and sunset. In this time of COVID, as a matter of fact, we've seen the whole industries change at a moment. And we see platform changes happening with this, whether go to mobile or internet or big data, et cetera. There's a great deal of turbulence. And what I was looking for was the opportunity to work with partners and establish a culture. And the culture would be around the support of the entrepreneur. I didn't want to be, call it arrogant in the perspective of saying, I know where the opportunities are going to be. Instead, what I wanted to do is to create an environment where entrepreneurs who are thinking different would feel comfortable speaking with us and would walk in the door and not necessarily be criticized. You see that in the investing world, and I looked at some of the participants, and I note many familiar names here. But we all know that investors have a way of flocking to areas that they see that there's opportunity, and rightfully so. But when they start flocking together a lot, it means that they're ignoring new thinking. And I think of it as regression towards the mean. And I think regression towards the mean is incredibly dangerous for an investor because it leads to herd thinking. And if you are approaching the industry, if you're approaching that mean, I will promise you, you're late for being in the market as a venture investor. You're late in the market. Be a late stage investor, great, but you're late as an investor. So what we look for are areas where you don't have homeostasis. a balance or an equilibrium. We don't like efficiency. Efficiency is bad for entrepreneurial thought and worse for investors. And I know, and I suspect that many of you in the audience know that entrepreneurs can be incredibly lonely people. Because if you're really doing something new, by definition, you're exposing yourself to criticism at every turn. Either the majority of the people won't like what you're doing, or will have all these wonderful ideas about how you should modify what you're doing. And these are, in other words, change the things that you've done. But the consistent thing is, well, most people think that you're crazy. And you have a flawed insight. I think to the early days of social, and how crazy I thought it would be that people would actually post photos of their kids and yourself on vacation, and let them know that you're not at home, and let them know your children's names. I mean, that is anathema to the way that we were brought up. But now it's, yes, this guy Zuckerberg, who was not the first person in the social network, he was probably around the 15th, came up with it. But it worked, and he was just as crazy as in the early days of the internet, when many people thought it was a crazy thing. But what we wanted to do was to provide a safe haven for the entrepreneurs to be themselves and to be supportive, and not have to look at their backs when dealing with us. And we were only able to do this in an economic way with the support of an entrepreneurial organization such as Silverstein. They gave us all the space, they gave us all of the Rolodex, and all of this ability to potentially be wrong. Our ground rules at SilverTech, and this is very important, please, you have degrees of freedom, but you have to draw the line where it affects our reputation. We have a 60-plus-year-old brand. You cannot besmirch it. And for Larry and I, that's music to our ears as well, because we embrace the same ethos. But again, to turn it back, we also look for entrepreneurs that have the same ethos. We look for people who are intrinsically driven. We look for people who are just, and I think driven was the right word, is in their heart, they sort of can't help but to do something which is special. And maybe if they're right and we help a little bit, it could be historic. And so, Larry, maybe you can explain a little bit more of the details and take it from like this 30,000 lovey-dovey square feet into what is it?
Well, Charlie is by de facto our chief culture officer. So he just sort of has infused through the organization that we should and are should be in our entrepreneur centric, and to think in every action what's good for the companies. And having partners like Tal and Larry Silverstein, Lisa Silverstein, has really given us the background, not just from a physical space perspective, but also from a network perspective. Silverstein's got a really incredible network, not just in the real estate industry, but across industries that we've brought to our companies. So here's what we actually do. We have an accelerator that feeds our fund. We've worked with 27 companies over the past 5 years. Now, most people think of an accelerator and think they should be working with 27 companies every quarter. The relationship with Silverstein has allowed us to focus on quality rather than volume. And that's a blessing. And it fits really well with my personality, Charlie's personality, and Tal's personality. We think in years, not in months. We're long-term people. We build real relationships with the entrepreneurs. We get to know their families. They're in the office, out of the office. We get to know their employees. We don't feel like we have to do a tremendous amount of diligence before we invest, because we're going to the water cooler and the coffee machine and the lunch table and sitting with the pre-sales people in addition to the CEOs. We became very Israeli, more because we had an Israeli network, but not by design. And we don't do any marketing. So almost all of our deal flow comes from our the companies and their investors. And we're really comfortable with that because we generally don't have to pitch ourselves. And we say to a new entrepreneur when they're in town, come sit with us for a week, 2 weeks, a month, see if we can help. We'll see if there's chemistry between us, and talk to whoever you want that's here. Some of the companies have been with us for 3 months, 6 months, but some have been with us for 2 or 3 years. And we're really proud of that, and we're really proud of maintaining the relationships. And that's really helped from a number of levels. From a diligence perspective, we know how the companies are going to react when we make a high-level contact for them through Silverstein, through my network, through Charlie's network, in corporate America, in the real estate industry, elsewhere. We get to see how they actually follow up on those contacts because we're often invited to join the meetings. And that's led to a real spirit of collaboration. And it's given us a lot of humility because we know that we haven't built the business, but our entrepreneurs have really built the business for us. And we are incredibly grateful for that.
And it's not just the real estate technology connection.
No, it's really important to focus on.
Are sitting in your building, right?
That's right. I mean, I'm in the office today. We have a wonderful space. It takes about half a floor that we've taken over more and more of. A beautiful 7 World Trade at the top of the financial district, the bottom of Tribeca. And we sit with our companies and we really miss them. But the fact that we've sat with them for so long has given us the ability to really establish relationships and keep that going through physical distancing and people not being in the office. And, I'm going to take a walk with one of our CEOs a little bit later today who's in his office alone. And, we love sitting with them. We feed off of their energy. And as I said, they've really built our business. Denny, you asked us to talk a little bit about what's happened since the shutdown in March. We didn't know what to do. We've lived through, all three of us have lived through 2 major recessions, including the dot-com burst and 2008. We encouraged our companies to take decisive action and not to be too precise. And by and large, they followed that advice. We also asked them to follow their own customers. If their customers were healthy, chances are they were going to be healthy. If not, then they were going to have some problems and they should think about cost cuts. We've been incredibly heartened that they did take decisive action. And the companies, to our somewhat surprise, have been quite successful through the downturn. Our companies in the aggregate have raised over $100 million in 2020, the majority since March. We had a few companies with large term sheets on the table that closed without renegotiation, and that's really a tribute to the CEOs rather than a tribute to us. We just pick good people to work with. There are areas that have really thrived through the downturn. There have also been areas of pain. We have both within the portfolio. But by and large, we feel like we've weathered this fairly well. A few examples: Simperis raised a $40 million round led by Insight. They do cybersecurity that protects the login systems for big enterprises. Their clients are like Walmart and Geico and Dell and HCA. And even if some of those entities are working from home, we know that the bad guys generally work from home always and don't slow down in the cyber world. So that's been an area of strength. We have Identify, which does digital health, specifically in the genetics area, and they've been extremely busy working with some of the big health systems and big testing companies for genetic counseling. And then CityHive, a company which has really benefited its clients. It's grown 8 to 10x over the past 3 months. They do digital storefronts for businesses like the wine and spirits business, and their growth has just been tremendous. So we're proud to be associated with all of them, and we can give you other examples. But we are navigating this just like everyone else and trying to figure it out on the go and really following the CEOs and their customers.
And when we're looking at what's going on right now with COVID-19, first of all, what are you saying to your existing companies? People are dealing with something they've never seen before. I spoke with Tal in the past about adjusting, getting out of your comfort zone, inventing yourself. figure something out. But still, what are you saying to companies that are in stress? I mean, they have you guys to obviously help them, but what kind of advice would you give them? And what have you learned from your best CEOs during these days when you see how they manage and everything?
So maybe I'll start, and Charlie, if you can follow, I'll be short. But I think at the high level, COVID-19 is an accelerant, and it kind of feeds the flame of companies and people who can do and are doing well, and it can turn off a candle by accelerating what happens there. So we urge people to move quickly before optimizing on every element, because if you move fast, you have a much better chance of doing well. Larry mentioned a company called City Hive, who grew dramatically over this period. They mobilized themselves. They worked 24/7, weekends, every day, because they figured out that they can help small businesses, small retail shops. And it was amazing to see the momentum. Their growth, they didn't anticipate to get to the point they got for the next 2.5 years. And they got it within a month. We've seen it with other companies that are part of the SilverTech. And our job is just to encourage and tell people what we've learned, what we've seen. As Silverstein, we've been there. We've been through 9/11. We bought the buildings at the Twin Towers 6 weeks prior to 9/11. We thought that everything would be great. These were the largest buildings built until that time, and it was the largest real estate transaction until that time. And there was a lot of pride. And then we started to work with the tenants to help them and understand how they're going to grow. And all of a sudden, the buildings were taken down by terrorism. But from our side, after the initial shock and disbelief of what happened and losing lives of friends and employees and a lot of people, we said, okay, we have to move forward. And Larry said, how do we move forward in this capacity? And he brought together all the families and all the friends that have been with us for many years. And we all came together and we moved through it, and we moved fast. The idea is to move as fast as you can and optimize later, because nobody knows exactly, nobody has a real crystal ball to tell you where COVID would go. What we know, though, is that we have friends, for example, in China. A partner of ours and good friends are the largest real estate commercial owner in China. And we spend time with them on video conferencing, looking at their buildings, looking what's going on. They're about 8 to 10 weeks ahead of us in terms of dealing with this. And you can see then that now there are 85 to 95%, depends on the properties, back to the workplace. And it affects everything. Is retail going to be affected? Absolutely. Those who are not fast enough and not wise enough and not adjusting fast enough will be hit. And of course, there are examples of people that, to no fault of their own, were just sitting in the center of where this meteor strike hit. If someone was in hospitality or in specific areas that were hit dramatically and nobody could go on a cruise ship or another thing, you can give as much advice as you'd like. They're going to be hit. They need to very quickly adjust themselves and plan for the future. But I'll pass it to Charlie, because I think, Charlie, you have a lot of things to say about it.
I have a two-part answer. The first part is that for the companies, we advise them to look at their customers, that there's no universal answer in a fast-moving environment, that nobody's going to have the right answer in the first few weeks. So they should move quickly and understand it's not going to be precisely. And for the direction to move, look at the impact on their customers. There's some areas, I mentioned sunrise, sunset before, where e-commerce clearly became a sunrise area. And bringing people together for meetings was a sunset area as well. If your customers are healthy, then you're in a good area. If your customers are troubled, then you're in a difficult area. If your customers are on lockdown, you're not going to be making sales in the next period of time, and you need to adjust accordingly. But, opportunities open up, and sometimes opportunities come from really bad things. I'm going to give you an example of a bad thing. So we have 67 participants in this session right now. And if you turn to the Zoom webinar chat, you see that somebody has hacked the system right now. And you see that this person has put in a number of really outrageous statements. And especially with what's been happening in the world right now. And so here we are having a session amongst friends, people who want to learn and communicate, and look what we're exposed to. Isn't this a shame? Isn't it a shame that Denny and Zoom and all of us, now we have to figure out how to fix this out of, there are people taking advantage of this bad stuff. And I am sure that there are entrepreneurs who will focus on security for non-persistent connections, things like this, to now protect us. Larry mentioned before about security being important. You're seeing firsthand, people are taking down hospitals, denial of service attacks on hospitals for ransomware in this day and age. Outrageous, outrageous. But I think that things like this really highlight to us as SilverTech, a Silverstein affiliated entity, that you can choose to be on the right side of history. And that's a decision that you make every day. We believe that being with the entrepreneurs really places us at the right side of history. But I couldn't let this go unchallenged. Thank you.
Yes, absolutely, Charlie. I 100% agree with Charlie here on everything said. And some people are not good people, and unfortunately, in this day and age, not good people can affect a lot of people. But if we all come together, and those who are at the right side, I always believed and always feel that we will do well, and we'll be able to put those people behind us and move forward. And the example of what you brought up, Charlie, and Danny, you may know one of the companies that we have called Simperis. The first thing they did, COVID showed up. They said, let's help protect all the hospitals we can. They have a technology. That company raised recently, it was announced. How much money, Larry?
40 million.
They raised 40 million during COVID, doing it over Zoom, $40 million. And they said, let's go and help hospitals protect themselves. And we have companies that like Scream that has technology that can deliver for the same cost using GPUs, fast access to data, an incredibly fast access to data. And immediately they rallied up and said, let's help hospitals, everybody that needs to analyze the genome. And you need to sequence it. And this takes a lot of time and a lot of money. They use their technology, which was sold before to different institutions. They said, let's help all the hospitals. Or a company that we have called Aquant that has a technology that analyzes devices and says and predicts which device according to some signals that come from every device. Every device you have, from air conditioning to your oven to anything, sends signals all the time, and they can predict what a technician needs to bring and how to preempt a mistake or a problem with that device. They immediately rallied up and went to help the hospitals and say MRIs and CTs and all these devices need to be scanned quickly because they cannot fail, not at the time of COVID. And just by doing those things, plus the regular business they have, they took off. These companies took off. They not only raised capital, but their business is taking off. So I think if you take the right people, you just need to help them a little bit, a little support and a little open ears and a sounding board and spend the time with them. There is no replacement for that, to my opinion.
That answers your question, Amnon. Are we project driven or are we founder driven? We admire the founders. We learn from them every day. The founders, their call to action, their intrinsic desire to create something important, they lead us. We put them on a pedestal. We try to stay out of their way. In Israel, and many of our companies who are working with us are Israeli, the super majority. In Israel, they have an old expression, you'd rather hold back a racehorse than to kick a donkey.
Yeah.
When we're working with these people for a few months, we know the ones that we want to hold on to Superman or Superwoman's cape. 9 of our founders are females as well, by the way. And we don't look for females. We don't look for Israelis. We're just blessed that our entrepreneurs tell their best friend that we're good people and we can help them.
I want to ask you, we didn't plan this, but I want to ask you this. People are talking about the effects of COVID-19 forever on our lives. Now, obviously things go online, you're going to order your stuff from the supermarket online. Personally, I love to go to the supermarket and buy all the ice creams I don't need to buy. When I go to the supermarket, I come back with everything we don't need. And my wife screams at me, why don't we have porridge? And I said, well, I don't know, but we have dolce de leche Haagen-Dazs. But that's one thing. Second of all, Zoom. You see this idiot that we had to deal here with before. You will never see that at a conference. And there's something about the dynamic here you'll never get at a conference. When I'm meeting Tal or you in person, I can take you to the side, talk to you. When I spoke, and we're talking about family offices with one of my families from England, and I asked, why don't you think that platforms of doing business between families don't work online that well? Some would argue that they are, but I doubt if they are working as well as they should. I spoke to Philippe de Gaspé-Bombian that said, well, the next generation will start to use it. But he told me, because I want to look in the eye of the other family when I talk to them. Old school. I want to feel them. I want to trust them. And last thing, it's a long question, but I'm talking about different aspects, and that I would also like to hear what Tal has to say later on about New York City. I moved here not because of the sunshine and the palm trees, because in my eyes, everyone at some point go to New York City. Everyone. You can be in LA, you can be in London, great, but nobody goes to LA like all the time. Everybody comes here. And you see people getting out of the city. You see people moving to Miami because of tax reasons, or you see people moving to Connecticut, like business people. Do you think, and that's part of my question as well, COVID-19 will change the prominence of New York City? And who else can answer that question than people that lived and are New York City? So it's a long question. What do you really think will stay after COVID-19? Will we actually become machines that work on online with everything we do? And
okay.
It's a long question. I don't know. I could have said it differently. Yeah,
can I take a stab at this? And Larry, I see that you also would like to say something. I'll take a short stab. First, to your point, I would never bet against New York. We've been here for a long time, through all the cycles, and New York always comes back stronger. And part of the reason that it comes back stronger, not just because it's the largest city in the United States, New York has something in it which is incredible and hard to replicate. Everybody feels at home in New York. I came from a different country. I came from Israel. I felt at home. I traveled and I spent a month in every city from New York, Chicago, Atlanta, LA, San Francisco, the place I felt. And I wanted to pick the headquarters for my first company, which we started in Israel when we moved to the US. And the business is in the United States, and then in Europe was the second line for the business. To come to New York, it's an experience. You have all the culture, and you have a city built by immigrants and immigration, and you have the Statue of Liberty that tells you the moment you step here, you're welcome. And that's something unique. So if we are hit by terrorism, or if we are hit by a flood, and we have different issues with things that can happen to the city. Sandy, the storm came in 2012. The city comes back, rallies together, and people fix things and make it work better than any other place. It's a city that accepts people. Very different than other cities in the United States, not trying to put anybody down, just saying that that was my personal experience. And that's why we focus a lot on this city, even though we have operations across the country and globally. I think the city always shows us that this city comes back roaring and excited. There are always sometimes challenges that you will find by certain government issues or other challenges, but they get resolved with time. Regarding COVID, I don't say that COVID will disappear and we'll look back and say, oh, it's gone, but eventually they'll find a vaccine, and we believe they will. They're very close, and even they're testing it, and eventually a vaccine will be here. But we also look at what other countries are doing, so we shouldn't be surprised. The crystal ball is here when you look at what happened in cities that were in shock, in places that did not know what to do. And here we compare mainland China, Taiwan, you look at Israel, countries that came back to the workplace. What does that mean? People are comfortable coming back once they see that the devil is not that dangerous. There are always people that have high risk. They should stay at home. They should isolate, because until the COVID is gone, they have a high risk that something can happen to them. And if they contract the virus, they can be at a very high risk. But putting that aside, the COVID, for example, in China, people are now back to the workplace and they work comfortably and they start to shop and they shop well. Doesn't mean that retail is 100% capacity, but the engine is humming. The engine is working and it's doing well. In Israel, they're full blown coming to the office. And if they have another 100 cases, not casualties, cases a day, they say, oh, the numbers grow. The numbers are very, very low there now. They handled it very well as a country. And not everything they do there we can do here, but we are providing with new technologies of how to do things efficiently, with privacy and with all the sensitivity that we need to have in the United States. So do I believe that in the future COVID will be behind us? Absolutely. How soon? Nobody really knows. If someone tells you they know, they're guessing, and their guess is as good as Charlie's, Larry's, your, and mine, or anybody on this participants panel, or the participants that are waiting in the and watching this. But we do know that countries that are a few weeks ahead of us to 8 weeks ahead of us, they're already comfortable. Until you're there, you may not feel comfortable. Once you start to go to the office and see that it's normal work, and with some safety behind you and keeping some cautionary mechanisms such as disinfecting everything, or having antimicrobial tapes on the door so you can touch it and it doesn't pass the virus, then people say, oh, it's not that difficult. You have to handle a lot of things, anywhere from commuting to how the food is delivered. And a lot of these things I think we are doing very well, and we can have this as an offline conversation. That's from my standpoint. I think COVID is not going to disappear, and one day there may be another pandemic, but we are all understanding it and now understand that you can live with this without the super high risk. Like SARS affected Asia dramatically, and that's why they put their masks very quickly the moment they heard about it. And if we would have started this 2 or 3 weeks earlier, we would have had less than 1/10 of the number of casualties we have today. Not being political or anything, I'm just looking at the doctors and the research. This is the expectations that the researchers are saying about what would have happened if we started earlier, or if we put the masks on and asked everyone to put a mask on from the early stages. Sorry. Charlie,
just pandemics know no geographic boundaries. It doesn't know the difference between a suburb, a city, or a farm. And the Spanish flu, which is a misnomer, began in Kansas on a farm. It was a swine flu. New York has had 5 pandemics in the last 200 years. This is the 6th. New York had growth spurts after the last 5, despite the conversation and the good question that you're asking, Danny. Maybe it will be different for the 6th one. I don't know, but as Tal said, I'm not sure I would necessarily bet against it.
Now, back to technology. I wanted to ask you, first of all, not too many people know that, and again, when I want to ask a question about how did you reach such a great ratio of success and in finding companies that eventually did exit or were close to that. And by the way, the reason I found out was when I was sitting, in my private conversation with Tal, and then we talk, and then he tells me about this and said, wait a minute, you had the second one right up like several months later. How come we don't talk about it? This is, I'm not going to brag or anything like that. And many people don't know this is, not sponsored. You guys never raise really capital from outsiders. Just when I spoke to Tal, some families, can be great co-investors. I actually had to convince you guys to do this. So when I'm asking this question, I want you to know it sounds a marketing question. It's not. Really, I want to understand, how do you see what helped you reach such a great ratio of success? We heard some of it. You see them, they're sitting in your offices. It's different dynamics. I got that. But is there anything else that you can share with me on how come you managed to get so many great successes under your belt?
Charlie, why don't you take that?
Oh, I think you do a better one, Larry.
Hey, we're not really, we don't have a grand plan. Our plan is very simple. Work really hard with the entrepreneurs and let them refer their friends, because Charlie says no one understands what I say, but venture capital is not just a research business. It's about access to the best companies and the best deals. And you could do 1,000 deals that may have no returns, but if you get in the right network with entrepreneurs successful entrepreneurs telling their friends, I worked with those guys and they helped me, that's the best marketing we could ever do. And that's how we drive our deal flow from the top of the funnel on down. That's what we wake up every day thinking about. We think, how can we help our companies? And if we continue to think, how can we help our companies, they're going to send their friends.
I agree with Larry 100%. And I'll give you just one example. Charlie, that was obviously involved with Checkpoint. If the founder of Checkpoint, one of the two founders of Checkpoint, calls Charlie and said, I have a great company, I need you to meet them, I'm actually investing in them and I want them to be part of SilverTech Ventures, which is, Charlie, it's a true story. We cannot judge the performance of that company in the category of cybersecurity as well as the founder of Checkpoint. But we know that they have a good eye. We will spend time with them. We will analyze how they behave just by spending the time. We don't actually care about the PowerPoints of the founders. We don't believe that when someone is presenting just the PowerPoint, which is the distilled information, it's the real facts and truth about a company. It's a marketing presentation. There is no replacement to spending time together. And when you spend time together with entrepreneurs, either they look for some help and they communicate and they're open, or they don't. If they don't, we say, you can succeed. And I'm sure we pass on some great examples, but we don't want them around us, because if we don't add that value of helping and listening and being open at the times that they will need that, then it's not helpful. And that helps us a lot with getting the right people, the right mix of people, that they also are willing and open to pay it forward and help the others. So we had entrepreneurs during COVID, and we have sessions every week, and we have an open hours on the phone, and we said it's an open 1 hour, then it becomes 2 hours and 3 hours and phone calls, but we put them on Zoom and they can just jump in at any time and talk to us. Or physically, when, like Larry's in the office, they will step into the office. Charlie puts all the nuts and the fruit around there, and everybody knows that. So they come and eat the nuts, so they have an excuse.
I didn't know that. I will go now. Now that I know, I will definitely pay more visits. Sorry.
But Charlie puts that there, so they have an excuse to step into the office and take the nuts. And whenever I go around and I go to a store and I see some nuts, I bring them to Charlie, because I know that it gives the real reason for the entrepreneurs to come in. And then they ask some questions, and then they sit down, and then they don't leave. And the dialogue is incredible, because we learn things that are much deeper than the board of directors of these companies will ever learn. And with that, we can really help. We don't want to be on the board, because then it puts a barrier between us and them. Then we are voting on their compensation and we are voting on their future. We want to be on their side, and then we get exposure to things that nobody else gets. Now, entrepreneurs that are open and are willing to adjust and adapt quickly have a higher chance of success. I've been there. If I didn't make a lot of the moves, I'm sure that my previous companies would have been destroyed. And we had to move quickly. Here you have people that all they care about is your success. Number one, it's your success. And then when they can talk to other CEOs openly, I don't know of any CEO that doesn't have such a network of other CEOs that can help them, which is not enjoying it and using it. And taking it one step further, at Silverstein, we have something unintentional. Again, it's 63 years in the making. We have thousands of tenants, but we have over 240 tenants of ours that are the largest companies in the world, out of the top 1,000 companies. And when you can take an entrepreneur like Charlie brought the other day, Michal, who started visit.org, and we say, okay, there's a great vision and a great product, and it helps with employee engagement, and it helps companies come with missions and doing good. And it's great for any company that has a person in the company that has to figure out how to engage their employees. now they can use a platform that is measurable and analytical and helps bring all these events to the company, and connecting her with the head of HR, I believe, at Moody's, and they sign an agreement and they are using her platform. I don't see how an entrepreneur like this could have gotten there and have the open dialogue without that kind of connectivity. So putting those entrepreneurs in the center is key. If you do that, you increase the probability of success. You don't make it 100% ever, and you don't take someone who has a very bad business model and change it. But frankly, most of the business models that I've seen change 2 or 3 times during the life of a company. And if you are there to, sorry, go ahead, Dan.
Yeah, I wanted to ask you, because that again brings me to the same point. Some of the magic here, again, that you talk about is the fact they can talk to Charlie and Larry, and they're, you meet them everywhere. And that is somehow contradicts what you hear all around these days through in COVID-19. People are saying, oh, companies now understand you can work from home and it's so great. And it's a personal thing. If you cannot concentrate because you're distracted, it's a personal thing. I think if you're not a telemarketer, that it really doesn't matter where you sit, how can you not value the fact that when you go to the bathroom and you meet somebody, you say, oh, George, I forgot to tell you this. Or when I go to the kitchen and I meet another guy and then an idea comes to mind, how can you think that people can sit at home and be as efficient as when they, I just don't get it. Maybe I'm old school, but that's exactly what you're talking about. The fact they can reach out to Charlie and not coordinate a call with him at 9 p.m. That's my question. I don't know if it was a question, but it was, I guess it was
a point that we have to be very careful with. There are some people that are at risk, or a family member is at risk, and they should continue to work from home because the alternative is not to work, period. And they can be as productive as they are trying. But there is a very big difference between a person or an employee's productivity and a team's or a company's productivity. And when you're looking at it, an employee productivity, some that are telemarketers or salespeople, they can work from home if there are no kids around jumping all over them. They can do that and they can enjoy it. And sometimes they say, I feel alone at home, I need to come to the office. What COVID taught us is that there are ways that are in between. It's not black or white. It's all the way from white through gray, all the way different shades, all the way to the black. Some people need to come 2 days a week. Some people need to come 5 days a week. Some people can work from home, and some people will be forced to work from home. And you should accommodate that because they should not be in an office. They have a lung condition or any other health condition. So the world will adjust to that, already adjusted. I think as I said at the beginning, COVID is an accelerant. It accelerates success and failure of companies. We always hear about the extremes. We always hear about Zoom that is doing very well, or many companies filing for bankruptcy. There are more losers than winners in this case of COVID, which is unfortunate. But in terms of employees and companies specific, you will find that majority of the employees want to be in the office and they want some flexibility. They want on a Friday to work from home or go with their family somewhere far away so they can have a longer weekend. They can still work on a Friday, but they will sit somewhere and they get a second home. We've seen a flood of people buying a second home. They want to be in the city, otherwise they don't know how to get to their workplace, but they want to have a smaller home in the city and a house out in the suburbs or further away. They're willing to drive a little bit. We're starting to see that trend, and it's a natural trend. It's not a bad trend. And there are some people that will say, I cannot even imagine not being in the office. The serendipity of meeting someone next to the cooler or coffee machine or just passing by and talking to them, that is needed. The other thing that you will find with time, and we can have our own bets and everybody on the call can think what they will imagine, people who are closer may find that because they're interacting more rapidly with the top management, either they're promoted faster, they get more access to things. You don't need to schedule a meeting to understand what's going on. It's very hard to systematically expose everybody to everything. But when you're physically there, there's no replacement. Just like there is no replacement to dating. You need to meet someone in order to date. You won't do it over Zoom every day. At some point, you need to meet the person, and as you said, Danny, looking someone in the eye, really looking them in the eye. That level of trust is hard to build over digital communication. It's not impossible, but it's very difficult. And for some people, it is impossible to build that level of trust. Sorry, I spoke a lot. I'll let Larry respond as well.
I think you covered it pretty well.
And how did COVID-19 change preferred sectors for you? I know Berkshire just sold all of their aviation stocks, right? How did it change your sectors and your outlook as a fund? And maybe I will add another question to it: which sectors you wouldn't touch?
It has not affected our sectors, the sectors that we look at. We look at things in terms of years, not in terms of months. Yes, there are some companies that are going to have a hard time because what they do is physical in nature. Most of what we do is software and internet, and it's a sector that has done pretty well because everyone's sitting in front of their computer, no matter whether they're in the office or they're in their basement or wherever they are. So we just haven't changed. I mean, our biggest struggle is that we're not face to face with the companies every day, because that drives new business for us, just like it drives new business for the companies. We are looking to work with talented entrepreneurs who share our values, that, you know, people that we like working with, and we're going to continue to do that. And look, Denny, we've been pleasantly surprised that the companies have done fairly well through this shutdown. I don't say that to be insensitive to the 40 million people in America and more across the world who are out of work through absolutely no fault of their own. We just happen to be in a sector that's doing okay right now, and we're going to keep doing it, you know, to whatever extent that we can.
And we have a couple of questions from people, but before that, I like dramatic questions. So, what's next for SilverTech?
Charlie?
Charlie will answer the dramatic one.
You can tell us.
We're seeing an interesting phenomena that's happening. As Larry mentioned, over the last 90 days, the companies in our portfolio have raised $107 million from the venture community, primarily in expansion capital, and they've completed one merger. And we have a fund right now. It's a relatively small fund, which has made 14 investments, 15 investments. And what we're seeing is continued demand from our entrepreneurs to continue to support them. So we view ourselves as building a relationship with the entrepreneurs that isn't really stage dependent or isn't really life cycle dependent. And in many ways, we're sort of limited by having the accelerator of the physical space, and then a little fund, and then it seems to me that the entrepreneurs are leading us to have a larger fund to continue to invest in them and keep the relationship as vibrant as it's been in the past. So that's probably something that we'll be doing, and doing it in the not too distant future.
I want to tell you, I'm excited. Sorry, go ahead.
Sorry, Danny. I saw a question from a gentleman we know called Yair Sarusi, if we can give an example of a company that grows fast. So I think there are a few companies here that grew very quickly. I wouldn't say because of, but in spite of some also the accelerant of COVID helped. But we have companies like City Hive that we mentioned that is growing very dramatically and was started by a PhD, a very smart guy from the program of Cornell Tech, who was at the runway program there, the top of the top, and came to us at the beginning when he started the company, and his company is growing on fire. The COVID actually helped the company grow even faster, as we said. Companies like Aquant, which we mentioned, that is identifying and helping you figure out where devices are going to fail, anywhere from big devices, big printers, big air conditioning, and predicts it with artificial intelligence and can send the technicians ahead of time or with the right tools instead of a technician going 3 times. Companies like Semperis, who grew dramatically, and in the cyber world, if you look at the graph of cyber attacks in the last 3 months, it's insane. It's growing, and the speed of the more hackers or people sitting at home that used to go to an office and do a decent job, then decided to start to hack or take their skills the wrong direction is significant. Scream, and Larry and Charlie, please stop me if I'm saying something wrong, but Scream, also a company that grew dramatically, providing the very fast access to databases and big data with technologies using GPUs. They're on tear, on fire. Companies like the Guarantors that provided a solution. And I think some of the team at Silverstein helped with the ideation of it, but the Guarantors that has been close with us came with one product and then developed a second one, which basically helps tenants in their need today of liquidity. So the simple example, it's the second product of that company where they come to a tenant that has a letter of credit. And we have a lot of those tenants, all of them have a letter of credit, but imagine a tenant that has a 6 million or 10 million letter of credit because they have 2 floors or 3 floors in a building. That letter of credit, other than giving us some peace of mind if the company is in trouble, but if they're not in trouble and they need liquidity, it's not money that we can use, and it's not money that they can use because they have to lock the money. The guarantors comes, underwrites the company with technology with the push of a button, and they're backed by 4 large insurance companies. For example, Chubb is one of them, and they'll say, I'm willing to take the risk and release their letter of credit and give you an equivalent to that. So it's no money off their back, it's just taking the risk. As a landlord, I'm happy because I'm getting Chubb. As a tenant, they're happy because they get the liquidity they need. So it solves their problem as a tenant, and that product is taking off as well. So you see a company that has been getting such a demand where before they had to explain it, now they don't have to explain. They just have to say, I have the product, and everybody's calling and getting excited. And we can refer tenants. It's not just for Silverstein, of course, they addressed every landlord, but they're a company that were open enough to listen to the issue, and we identified that issue a couple of years ago, develop the product, convince the insurance companies, work with them, and then come to the market with that product that, not surprisingly, but is very needed these days and helps everyone. It's a win-win for everybody. So those type of companies, there is another company called Ven that is under a tear and doing very well. Charlie, am I missing some examples?
No, I think as a summary, there's 5 companies in the portfolio which are in hypergrowth. And there's 5 companies in the portfolio that are valued at more than $100 million. But look, markets open and close, so we'll see how it all winds up. I think we all got to stay really close to our knitting. And Danny, going back to the what's next question, we really view ourselves as a life cycle partner for the entrepreneurs. That's really important to us. Same way that we look for entrepreneurs who are intrinsically driven. That's a core value for us. We're intrinsically driven to be helpers, and also in many ways to be followers for the entrepreneurs. We think that the best entrepreneurs aren't looking for a leader, and that leadership mantle in a company only has one person in it or 2 people. They're called founding CEO, founder and CEO, or co-founder. We take care of them, good things will happen.
And I want to tell you, I'm very happy that we have good people here. When I say good people, it's not only senior people. I will just say, excuse me, Yair Sarusi, for saying that Yair Sarusi happens to be one of the most important people in Israeli financial history. He was the chairman of Israel's largest bank and a big mentor of mine, I have to say, and a very, very good person. So I'm so excited to have Yair on the call. I didn't even know. So that's a great surprise. And I think one of the things I see here, also with Tal, I once told him, listen, I have this guy, he has an idea, I wanted to ask you something. He didn't know anything about it, and Tal says, give him my cell. And I think that openness and is what, and we have David Sable in 2 days here. And one of the things he said is always be humble and be kind to others, and you'll see how things open up. And that's exactly, I think, what you're showing here. I still remember until today, Yair, if you're still there, when I did a speech when I was a young entrepreneur at the Strauss family house, and somebody was talking to you, a director that felt very important, he can speak while I was speaking. I didn't mind, and you told him, shh. We have a lot of questions coming here. So maybe just quickly, because I know we've been over an hour now. So how can established business leaders, investors, and family offices promote positive core values and helpful business echoes for new entrepreneurs and business people and young leaders in the US and developing nations? And also, what is your view of the troubles in Hong Kong, and how would exodus of talent from Hong Kong affect your business others in Asia and around the world? So that's a question from Kevin West. I don't know if it applies to you, everything that was asked here, but that's one of the questions.
Anybody who wants to address this? Charlie,
Good.
Larry?
Tal, you have more dealings in Asia.
Okay. Look, I don't want to be political, and that's not our place to do it on a panel with 60 people and address politics. I think the situation will resolve itself one way or another. There are some people that will remain, some people that would leave. I think not in huge numbers to what we can expect, but this is something for the government of China to handle and for the leadership in Hong Kong. It's not an easy problem to have. It's a cultural mix that came after 100 years. The Chinese had a negotiation with the United Kingdom over 100 years ago and said the first 100 years is yours, and after that it's ours. And what you agree over 100 years before, the people that were born into it don't necessarily agree with it. So that's a struggle. It's a difference in cultures, and they need to handle it wisely. I'm sure there are many people handling it, and I don't think we can resolve it from here. What we can say is, because we are New Yorkers today, and we are international as well, is that we accept anybody and everybody, no matter where they come from, no matter what's the color of their skin, the gender, or their beliefs, or their orientation, whatever they are. If they're good people, they're welcome. And if they're not great people, then we don't need to be involved and associated with them. It's all about the personality. So from our standpoint, if they're entrepreneurs or people coming from Hong Kong or any other place, we open our arms and we say we're happy to listen and happy to help if we can. That's our philosophy. And again, I don't get into the politics and what I don't have a great crystal ball. I didn't buy it on time, and I couldn't find it on eBay or Amazon. So I don't know what's coming. All I know is that there is a challenge, and we have our own challenges in the United States. And I think it will all get resolved for the better.
And just another question for all of you. Tal, we talked about it at our private session several weeks ago. How, especially in technology, also in other sectors, employees used to come to the tech companies saying, oh, the other guy is offering me way more. How much will you pay me? And now I think that balance has changed. I think many people will get lower, obviously, salaries, and they'll be very happy to have a salary. And also another point we talked about is the trust. You showed me that research, Tal. The trust is now in the employers more than the government. So I wanted your thoughts on that, given the fact, that many people here are working for somebody, and that affects the companies we all invest in.
Can I hit the first part, Tal?
Sure.
Yeah, we've very much built a community here, which means that we don't just have relationships with the CEOs, we have relationships with their employees. And while we've talked about a bunch of companies that have been growing and hiring through the downturn, we are incredibly sensitive to people who have been laid off, talented people that have been laid off, again, through no fault of their own. So we've done our best to match up people who are looking for jobs with entrepreneurs that happen to be hiring, either within our portfolio or externally. And we feel like we have a major responsibility to continue to do that. And from what we see in our little sector of the world, there are a lot of companies that are going to be hiring, and we're continuing to match people up. So we have not seen the pendulum shift to the employer in our world, because entrepreneurs are still looking for talented people to surround themselves with.
Got it. Well, before I let you say, a couple of words to summarize last thoughts, We have more questions, but you will all have a follow-up email with some information about how to contact everybody here. So some questions are very specific, so I don't think we need to talk about them right now. So maybe just a couple of last remarks from all of you about what's going on, about SilverTech, and
I think if I can start with a few words, I say first, thank you, Danny, and thank you for the audience. I think we have a lot of good things to say, and we are happy that you invited us. But at the same time, just the ability to sit here and communicate and listen and see how everybody is doing is terrific. From my standpoint, I feel privileged and honored to be here. Looking at the family offices, being part of a family office, I understand the feelings and the needs and the questions. We are always debating amongst ourselves what is next, to your question. Like, from what we've seen and what the success that was not planned but is here, we say to ourselves, so what next? Like what Charlie mentioned, that we are going to have our own next step, which is SilverTech Ventures Select, which is to continue and grow the investments in success stories, which is not something I've seen out there. When someone starts a fund, they rarely have the already existing 5 or 6 hypergrowth companies at hand. But that's for us. This is just sharing. We're not magicians or anything. We're just people that work together and try and create what we can. And with that, I just can only say one last word is thank you. Thank you, Larry, and thank you, Charlie, for being such amazing partners, because we don't say it enough. We always laugh and we have phone calls and we call to say Shabbat Shalom and how are you doing this week and how did you do this evening. But thank you. I feel privileged and honored to be close to you, shoulder to shoulder, and get some of that magic that you guys are creating, because I love seeing those entrepreneurs succeed. I love seeing the smile on their face and the sparkle in their eyes. And it would not have happened without the two of you here. And then yourself also, how you took the steps forward for DC Finance, said, okay, I'm going to take it all the way with all the challenges. Events are not easy at times of COVID. I could have sent this question your way, but you said, let me open it up and do it online and invite everyone. So thank you for taking that step and that brave step forward and doing it. In spite of the hackers or the bad people out there, you did a great job.
Thank you. So great. So thank you very much. I think there are many more topics to cover, but we've been here for an hour and 15 minutes now, which shows how interesting it is. So as I like to say, I hope we can do another session later on down the road. Again, I'd like to thank Larry Wagenberg, Charlie Federman, and Tal Kerret for spending an hour and 15 minutes with us here. The day after tomorrow, we'll just say, I have a legend, a real legend, or should I say another legend from another world, the world of marketing and PR, the great David Sable.
It's a good friend.
I always like to say, do you guys know I have 20,000 followers on LinkedIn? And then I saw David's profile. He has almost 1 million people follow what he writes, which is crazy.
He's a legend. He is a legend. He is unbelievable. And everybody that has been and is with us as participants, I believe should try and join, if you're open to that, Danny, and try and join David Sables. He's a legend. He's one of the guys who are considered the fathers of the online marketing world and the communication world. So,
and he wrote a great kids book too.
He wrote a great kids book, and he's a smart, humble gentleman that always was the same. He is what you see and what you get, but very articulate, very smart. I don't know of many people that can speak like him.
And I would mention that he was the ex-global chairman of Y&R, which is obviously the world's largest consumer advertising agencies. Today, senior advisor for WPP, author, entrepreneur, and social activist. And one of the things I talked with him about, and not too many people know that he went to the Israeli army and took from there a lot of insights that he now uses in business from the world of tough army. In Israel, I was in charge of the first video library. That was my job. It's a risky one. You know, sometimes I had to cross 3 streets to get to where I was. But he was actually running all around the place with stretchers and everything. I didn't know that, and he brought a lot of that wisdom to his work today. So it's going to be a fascinating discussion. I'd like to thank you, everybody here. Hope to see you in 2 days. How do you spell his name? David Sable. It's the name of a rock star. It's like, you know, the David Sable live at the Carnegie Hall. You know, it's like that. I will write you the name. David Sable. You can Google
Sable.
That's the name.
Teddy, may I just thank everyone for taking an hour and 15 minutes away from teaching their children and homeschooling to join us.
Absolutely. Absolutely.
Thank you, guys.
Thank you very much, and we'll see you guys later on down the road. Thank you.
Thank you, Bob.
Have a beautiful day.
Thank you. Bye-bye.
Bye-bye.